Should we be putting Bitcoin in our 401ks?
I think we should be thinking about blockchain very seriously. And I think of blockchain as an infrastructure technology, almost like our freeway system, and cryptocurrency as the individual cars. As our population grows and our data needs become more complex, we are going to need a more robust infrastructure. And that's where blockchain comes in. So investing in the underlying technology can be very compelling. Now, there are about 10,000 different cryptocurrencies, so I don't want to lump them all together. But at this time, when life expectancy is increasing and we're seeing high inflation and really poor returns in the market, we do need to look for alpha in other places. I'm not saying this is ideal for a pension because overall there's a lot of volatility in the cryptocurrency space, but I do think we need to look very seriously at blockchain.
I do want to talk more about the tokens themselves, because you look at Bitcoin, you look at Ethereum, and as long as I've been on this beat, there's been a lot of asset managers courting pension funds to really get them into the space, but we have not seen that movement yet. So what would it take to make pensions, retirement systems comfortable with adding Bitcoin or Ethereum, if you just even narrow it down to the two largest?
There would need to be clarity with accounting regulations. Right now, it's unclear how to account for cryptocurrency, and that creates a lot of complication. There would also need to be transparency in terms of their reporting out to holders, out to investors. There would need to be robust security. So Bitcoin has proven quite secure to date. Other cryptocurrencies, not as much. We would also need clarity from the federal government on how it's going to be regulated. Right now, there's a bill in California's assembly. I think it just passed, and it's on the governor's desk for signature.
You know, it's interesting because you do see more people in Congress warming up to the idea of crypto. You see a lot of money floating into Congress for the idea of getting members of Congress comfortable with cryptocurrency. Do you think that this is going to move the needle more? Do you think the next election cycle is when we're going to see more movement in terms of that comfort that people would really need to get more comfortable with all the things you're saying, that longer term savings type money into crypto?
I don't know about that. I think that crypto right now has been uncorrelated from the election cycles, although it is more correlated with overall capital markets now. Crypto tends to follow geopolitical events, so much more global in nature rather than domestic US or local to, for example, to a state. So we've seen spikes in crypto as it relates to what happened in Ukraine and money being transferred to Ukrainians for aid. When there have been other issues geopolitically, for example, say there happens to be some type of disaster, we'll see crypto being used there. So we know about its use there. We know that many people are adopting crypto all over the world, and it's becoming a standard. It is not yet the standard, and I don't know that our election cycles are going to affect that.
How has the crypto crash impacted pension funds more broadly?
Not as much as one would think. So pension funds are subject to ERISA. So they are regulated on how they invest. And part of that tenet of ERISA is the prudent person rule. So the fiduciaries of pension funds and of defined contribution funds have to invest like a prudent person, which means they have to consider the permanence of the fund, the amounts paid to beneficiaries, and the duration of those payments, as well as risk mitigation. There needs to be an optimization of return at a time when the markets aren't performing. So there have been some pensions who have invested in crypto, but they've invested a very small percentage. In fact, I haven't seen a pension that's invested in excess of 1%. And typically when they invest, it's in publicly traded companies that mine crypto or hold crypto. So there's an additional layer of reporting that they can review.
It's interesting because you mentioned that blockchain technology is where a lot of the investment needs to happen, but I'm really curious about what you mean by that, because on one hand, it's not like a pension can sit there and load up on a lot of venture capital wagers, but on the other hand, you do see a lot of big companies taking blockchain and really looking at ways to significantly change the existing markets as we know it, the bond markets, the stock markets, mortgage markets, all places that pensions invest very heavily in. So which side of that equation do you think the most movement is really going to be?
So I think it will be on their systems. Insurance companies going back to 2016 started to invest in blockchain technology. I remember some insurers doing paper and pencil claims processing, very expensive, very error prone. There are private permissioned blockchains, and several insurers started to adopt those. So that way they could see the entire claims process on the chain, make sure it was immutable, and get the payment processed more quickly with few, if no errors. So there's that type of infrastructure available. When it comes to pensions, again, they might have millions of members, many different changes to address, to payments. And if there was a robust blockchain technology underlying that process, I think it would be more efficient and less costly.